If you bought $1,000 of silver on January 1st, 2025, you'd have almost $2,500 right now. No crypto, no options, no leverage. Just a boring gray metal your grandpa collects coins of. And the wild part? Most people reading this are about to make the same mistake they made with Bitcoin in 2015. Watch it run, tell themselves, I missed it, and do nothing. Let's talk about whether silver in 2026 is still a buy, or if you're about to catch a falling knife. The story. Meet Dave. Dave's a 32-year-old electrician in Ohio. In January 2025, his uncle, the guy who still keeps cash in a coffee can, told him, buy silver, it's cheap. Dave laughed him off. Silver was sitting at $29 an ounce. Boring. Slow. Grandpa money. Fast forward to today. Silver just touched $69 an ounce. That's not a typo. That's a 140% gain. In under 2 years, on an asset most people think is safe and boring. Dave's uncle didn't get lucky. He understood something most people ignore until it's too late. And today, I'm going to break down exactly what changed, what silver looks like right now compared to 2025, and whether there's still money on the table, or if you're already late to the party. Segment 1. Silver in 2025. Let's rewind. January 2025. Silver opens the year at $28.90 an ounce. For context, that's basically where it had been bouncing around for years. People called it the forgotten metal. Gold was hogging all the headlines, breaking record after record, and silver was just there. Cheap, ignored, boring. But here's the thing nobody tells you about boring assets. Boring is often the setup, not the story. 3 things were quietly stacking up in early 2025. 1. Industrial demand. Silver isn't just jewelry and coins. It's in solar panels, EVs, phones, medical devices. The clean energy boom needed silver, and supply couldn't keep up. 2. A weakening dollar. When the dollar gets weaker, hard assets like silver and gold get more expensive because it takes more dollars to buy the same ounce. 3. The federal interest rate cuts made safe haven metals more attractive compared to just parking cash in a savings account earning nothing. By October 2025, silver had already blown past $50 an ounce. That's a level it hadn't touched since the Hunt brothers tried to corner the silver market back in 1980. History nerds, you already know why that number matters. Segment 2. What changed? The acceleration. Okay, so silver was already cooking in 2025. But what got us from $50 to nearly $70? This is where it gets interesting. In late 2025 and into 2026, the U.S. Treasury started ramping up debt buybacks. Basically, the government trying to manage a mountain of debt without spooking the bond market. That move tanked confidence in the dollar even further, and Treasury yields dropped. Add to that rising geopolitical tension, sanctions, supply chain jitters around the Strait of Hormuz pushing oil prices up, which fuels inflation fears, and you've got the perfect storm for precious metals. Gold shot past $4,500 an ounce. Silver rode right along with it, pushing past $69. Here's the stat that should stop you scrolling. Silver is up over 140% since January 2025. If you'd put that same amount of money into the S&P 500 over the same period, you'd be looking at a fraction of those returns. Silver, the boring grandpa metal, quietly outperformed most of Wall Street's favorite plays. That's not financial advice. That's just the math. And the math ain't mathing for anyone who sat this one out. Segment 3, Silver right now, where we actually stand. So where does that leave us today, right now, as you're watching this? Silver is trading around $69.70 an ounce. It touched an all-time intraday high of $121 earlier this year before pulling back hard to under $37. So let's be real with each other. This is not a smooth, boring line going up. This thing has been swinging like a roller coaster with no seatbelt. Some analysts are calling for silver to hit $90 plus by the end of the year. Others are saying the parabolic run is closer to its end than its beginning, meaning the easy gains might already be behind us. And here's the uncomfortable truth about investing that nobody wants to hear. The loudest hype always shows up after the biggest gains are already made. That's not me trying to scare you off silver. That's me telling you to actually think, instead of just following whatever influencer is flexing their coin collection this week. Segment 4, 2025 buyer versus today's buyer, the real comparison. Let's put this side by side, because this is the actual question you clicked for. The 2025 buyer got in at $29 an ounce. Their risk was low, but so was the certainty. Silver had been dead money for over a decade before that. They were betting on a comeback nobody could guarantee. Today's buyer is looking at $69 an ounce. The trend is confirmed. The momentum is real. Industrial demand isn't going anywhere. Solar and EVs aren't slowing down. But you're also buying into an asset that already tripled, sitting near volatile, unpredictable highs. Here's the analogy that'll make this click. Buying silver in 2025 was like buying a house in a neighborhood everyone said was sketchy. Buying silver today is like buying in that same neighborhood after it's already gentrified, prices already jumped, and there's a Whole Foods going in. You can still make money. It's just a different bet with a different risk profile. The question isn't, should I have bought in 2025? That ship sailed. Stop torturing yourself over it. The real question is, does silver still have room to run from here? Or are you buying the top? Segment 5. The verdict. What to actually do with this info. I'm not going to sit here and tell you to go dump your savings into silver. That's not how this works. And honestly, anybody who tells you that on YouTube is trying to sell you something. What the data actually supports: silver's core demand drivers, industrial use, a shaky dollar, global uncertainty, haven't disappeared. That's the bull case. The bear case is just as real. After a 140% run, a lot of the easy money is already made, and pullbacks in volatile assets like this can be brutal. We already saw it drop from $121 to $37 in the same year. If you're thinking about silver, the boring but smart move is what it's always been: position sizing. Don't go all in chasing a number you saw on a chart. A small allocation, something you can stomach watching swing 20% in a month, is how people actually build wealth with volatile assets, instead of panic selling at the worst possible moment. Silver taught us something bigger here too. The boring, ignored asset is usually where the real money gets made, not the flashy stuff everyone's already talking about. If this saved you from either FOMO buying at the top or sitting on the sidelines confused for another year, that's exactly what this channel is for. I break down what's actually happening with money. No hype. No get-rich-quick nonsense. If you want the next breakdown before everyone else is talking about it, hit subscribe. It genuinely takes 2 seconds, and it's the only reason I can keep making these deep dives instead of clickbait garbage. Drop a comment. Are you team "I missed it" or team "still buying"? I read every single one. Catch you in the next one.